Aloha everybody. Hope everybody's had a great week. This is 50 Pips rocking and rolling 24th of July 2015. Not making any trade calls or recommendations because you and only you're responsible for the trades you may decide to take. And the fact that you're listening to this means you're ready to understand. You accept all the disclosures on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So again, guys, I really hope everybody's had a great week. And I'm recording this update on Friday just since I won't be around to do it on Sunday night, but I know a lot of people look forward to the view of next week, so I just thought I'd do it here to make sure I could get something out for you guys. So again, keep in mind, next week's going to be very interesting. I mean, we've got IFO on Monday. We've got core durable goods out of the U.S., so it starts with some decent data points. We got GDP out of the UK. We got consumer confidence out of the US second. So on Tuesday, we're going into Wednesday, which is going to be the bigger day, right? Because we got that FOMC. Then on Thursday, we got RBA on the wires. We got some more data out of Australia with all that advanced GDP and unemployment out of the US. And then on Friday, we've got a lot more Australian data out of Australia, New Zealand, and the GDP out of Canada. Right over the next week, and we're going to have the PMIs out of China, so that's definitely something to keep an eye out for. So, you know, it should be an interesting week ahead. And again, keep in mind that next week's going to be the last week of the month, so we might see some positioning into the end of the month. And again, if you're trying to manage some decent, if you're trying to manage a P&L, or if you're trying to manage some kind of a track record, you know, it's never a good idea to be stubborn, but especially it's something you want to keep in mind. You want to make sure you lock in a good month. You don't throw everything away in the last week or the last days. I just want to go through a couple of charts that we've been discussing and we looked at last week, and also some things we've been talking about on Twitter, just to clarify, right? So the first thing I think is the move on equities, right? We've discussed how we were looking to be tactical to the short side. I'll look at ES and DAX. I think, if memory serves, we discussed the whole DAX in the last update. Sometimes you have to forgive me, things are blurred since we do the webinars every single day live. It just kind of all blurs into one, but I'm pretty sure we looked at DAX 2 last Sunday. But anyway, the discussion going into the week, right? So today we got Friday, Thursday, Wednesday, Tuesday, and Monday, when we were right up at these highs, right in these 2120s, right? We talked about the fact that it was holding a very big tone, but that there's no way that I would be interested, or we would be interested in looking for any kind of long, getting long at highs. We thought that the velocity of the move, or the pot odds, were to try and take stabs to the downside and be very tactical, right? We were in no hurry to get short, but we were looking for possible shorts into the 2120s, 2130s, highlighted on the chart. And if we got an aggressive pop higher at the beginning of the week, we just patiently wait for the next level, 2150s, right? So as we went into the beginning of the week, you know, very nice shorting opportunity right at the first level into those 20s. You see, basically we went in there, we got a nice little failure here on the 1 hour, right? Whether you traded the 1 hour, you use this as a place to hide your stops on all these subsequent failures. You know, very beautiful action, right? And we started to get nice downside moves, you know, throughout the whole week, basically all the way back down into these lows, and then bam, we broke down. And we said, you know, if we start to move back down, 2100s are the first big level, and it could easily bounce. But if it breaks below, if it holds below, you do not want to stay stubborn, because 2150s could easily come calling, right? Now, the interesting thing here is going to be how we trade into next week. Now, keep in mind that something very interesting has happened here, right? Not only as we've had continued downside pressure, but we've actually closed here below that 100 DMA, right? We also went through all the discussion why, we explained why it looks like the fact that we were looking for shorts, we were looking for weakness, because it looked like all those moves to the downside, even though they had a lot of velocity, the moves to the upside were much slower, and they didn't get the same traction that the moves down were getting. That's why we're favoring this, and we're saying, we, you know, looking for the next big move, 5-10%, you know, decent move, we'd expect it to come to the downside, not the upside. And now this is pretty bearish, right? So look at this into next week. Clearly, any close next week on any day below the 200 or below the 2050 would be particularly heavy. Now, the way this is trading, I suspect that even if we get any rallies, you know, rallies in the 2100s should get sold for continuation lower, right? So clearly the bulls you know, if we look at this sideways chop we've been discussing, really they still have a chance here to hold this, especially if they can avoid any daily closes next week above this dip low, or you know, any closes below rather the 2050 or below this dip low. But if we start to close back below there, you know, don't be surprised by velocity of move. You could see 1950s, 1900s fairly quick. So very interesting. So levels to watch next week. Resistance to the upside 21.00. That's going to be very interesting to see how we hold Monday, Tuesday, and then to the downside 2050s. But pretty much this is in play, right? And you can see that the potential for the acceleration is big, right? We talked about this on the DAX. The DAX was a beautiful little short setup, right? We discussed about how the action, even on the 1 hour, right, how the fact that we kept on putting these new highs, but then subsequently after the highs we got no momo, we kept on making these lower highs. We expected this to come right back down and it could trade very, very heavy, right? When it started to move to the downside, we said heads up, if we close below, you know, the bulls have a chance as long as they keep on closing this above that 11646 or above the 100 DMA. You start to get daily closes below this 100 DMA, you do not want to stay stubbornly long. We could easily be moving right back down, possibly all the way into the gap fill, but at least we would expect to see a move back into mid channel. So you see how aggressive the acceleration is. Now going into the week here on the DAX, you know, what's really interesting is going to be the mid channel, right? Because this is not only going to be mid channel previous support zone, but it's also going to be a protection of that gap fill, right? So look at this as being really the pivotal level. So now what the bulls need to do is to break this downside channel, this downside weight. What they have to do is they have to catch this, avoid any kind of aggressive action post the gap fill. They have to catch this into mid channel and then use this as support to continue the break higher, right? But if they can't manage to hold it above that level and we get that gap fill and we hold heavy, then everything will be pointing to more downside acceleration, you know, all the way right back down into that 200 and possibly all the way back into our range low. So our levels don't change at all on the DAX. The move is in play and it's moving quite nicely. Okay, so again, I think you can go back to last week's review, YouTube video. We talked about that in detail. Another thing we talked about last week was on Kiwi, right? We said just be very careful when everybody, their hamster and their goldfish is looking for something to happen and people think that price only moves in one direction. We discussed how we like to play for healthy moves, and what we said is keep an eye on what happens into that rate decision. You know, even if we get a cut, you know, everybody's expecting the cut, you know, then they took away some of the dovish statements, but basically, you know, we had the move down, this didn't hold, and we got that rip higher. So a lot, you know, very nice action there. Even if you look at it, you know, fairly classical. Actually, let me just do this on a blank chart. A fairly classical action, a fairly technical also, because if we get back on this Kiwi, right, you see what happens if we just break down to the 1 hour. We get that stop hunt, nice little stop hunt, very classical. Just we said, you know, there's two little levels the market will probably try and take out into the release, right? Those lows and this level here. So what happens if we get that little stop hunt right here, just tries to pierce below that level, gets no traction, and we rip up on the release. We know that when the move is good, what tends to happen, even in these small time frame moves, we see what happens. We rip higher and straight away new buyers or trapped shorts cover on the first move down, right? Bam, 50 back of the rip higher gets bought and then straight into the extension target 123. You know, very classical move, very nice. So this has clearly been an interesting chart, and now we'll have to see how we go into the week. But clearly there's a potential for some kind of bottoming pattern here. Watch these 6550s, right? It's all about the 6550s, bull bear line into the week. You start to get negative daily closes below there, then those lows are going to come into action. You know, as long as we don't get any daily closes below here, we could easily see more moves to the upside, right? Another thing we talked about, and I tried to explain it the best I could with 140 characters, we were talking about it on Twitter a lot, was CAD, right? What we talked about on CAD is that for ages we've been talking about this key level which was coming in the protection of the 31 with all those sellers coming in at the 3060s, right? And we look for tactical opportunities to short the first protection of that zone. And then what we said is keep in mind that that is such an important level. You know, clearly the market would be extremely tempted to go up and take that level out. And what we said is, even though a lot of people are talking about that 3060, the 3060 is really not that important for us. This zone here was our first attempt to try and short it to the upside, to the downside, right? These first failures, this was the first scalp shorts, right? And we weren't greedy here. You know, we said here, we're just expecting try to scalp to the upside, but we know that most likely that 3060, the stops are just too tempting. So what's interesting for us is not the 3060. We don't want to take any shots there, right? We take shots ahead of that. Once we go into that, our only focus is the 31, right? And as we said from early on this morning on Twitter, we said heads up today, the most interesting zone, most interesting thing on the charts today for us, you know, in terms of, you know, really higher odds setups is to keep an eye on that 3060 31 zone, because most likely price is going to go out, try and take those 3060s. We have no interest in that level, no interest in engaging at that level. Gun to the head, you'd have to have a buy stop just above, but it's not the kind of trade we like. We're focused on that 31s and failures of those 31s to get short after. No traction would most likely mean it will drag in new sellers, but most likely you'll see a lot of longs that have been waiting for that break of the 3060s and mega acceleration higher start to cover because they're not getting that. Most likely maybe missing the fact that the real level is the 31, right? So this is fairly classical setup. Back into the 31, 1 hour negative close, giving you a chance to get short even with a very, very tight stop, and bam, we got initial aggressive move to the downside here. Tweeted about that, you know, the quick scalps are done, anything more is gravy, about 50 pip reaction, pretty much 2 times risk. Then back up, chance to get short again on a second 1 hour negative close. Again, still fairly tight stop considering the level, about 35 pips here and back down about 40 pips from there, you know, so very interesting zone. Going into the week, going into next week, just keep an eye at that 3060. It's important as a pivotal zone. Any daily close above that level is going to be bullish, bearish below. Keep in mind, the longer we hold here and we can't get traction to the upside, there are a lot of players that are sitting on some serious profits on swing longs. And even in the last leg, sooner or later, market moves in both directions. Don't be surprised if you see some profit taking. You know, you can look at a lot of different previous resistances as support, but you know, bulls make money, bears make money, you know, pigs get slaughtered. Just keep that in mind. So I just wanted to highlight what I was talking about on Twitter in case it wasn't that clear for some people. Again, another thing which is just very, very interesting, as usual, we've talked about this so many times in the past, you know, when everybody starts getting uber bearish or uber bullish, it's usually the time to fade, right? You start getting all those comments, Bloomberg, everybody, you know, gold's going to zero, gold has no value, God knows what, you know. Well, you know what's happened to people trying to short a break of that 50 with tight stops or aggressively, it ain't sitting so pretty, right? So again, here we may have put in some kind of a short-term bottom on gold. The level's particularly interesting because we talked about we've had a range shift. The previous range we were looking at on gold was 1250, 1200, 1150, and right now we've had a range shift. This was an attempt for another range shift to the downside to try and call that 1050 into question, right? So at the moment we consider this attempt failure pretty much to really press a double range shift in the same week. So right here we'll have to see how this trades. Keep in mind that any hold below the 1100 is going to be heavy, and these lows are going to be attracting. But if we start to close back above the 1100, you know, don't be surprised to see 1130s print relatively quickly and some kind of short-term bottom to be set here. Again, a bit early to tell, but it looks like that, you know, very similar action on silver too. Cable, All about the 155.00. We talked about this so many times. Today tried to give a couple of heads up on Twitter. From terms of a bull bear line, a lot of trading opportunities around this. From a tactical point today, a lot of nice little longs to be had. You can even look at this, off all this basing action at lows. But really, it's all about those 155s. Globally speaking, we'd expect this to sooner or later catch a bid, but we've been fairly bearish for the past week. Right now, we'll have to see what happens. I don't think there's an awful lot of edge here. The only thing we said is caution, caution, caution. When everybody got excited to the upside on Carney, we said we'd favor playing the downside. Right here, we probably make a pretty good case for some tactical plays to the upside or the downside. Don't have a particular view. Bull bear line 55.00s from a daily close. Support below, resistance above, not too interested. Again, a lot of wheeling and dealing due to Euro GPB flows, not surprising, right? And then maybe one last one to look at is Euro. What's going on Euro? Where's the Euro chart? 50's going blind, 50's going blind. There's the Euro chart. So again, we talked about the fact that don't be surprised if you see some kind of a correction. Corrections are healthy. We view this as a correction inside a bearish channel, inside a bearish move. So we've moved right back up into those 90-70s. We've talked about how those 90-70s have been pivotal. So again, 90-70s bull bear line going into the week, bullish above, bearish below. As long as we hold above, we consider this still in play for rotation back to the upside, possibly into the 1050s, 1100s, still in a bearish trend. Close below some traction, then this could have been the short-term top, and we're moving right back into those 0870s. Fairly choppy around here. I think there been as always, there's different ways to express views. I think there's there been a lot of other charts which have been a lot more interesting to trade than Euro this week, namely the equity side and some of the commodity currencies. Keep in mind that because of all the discussions we've had in the past in terms of structural flows, funding currency, etc., Euro will most likely continue to find a lot of offers and continue to trade with a bearish tone. But don't ever forget that the market rarely only moves in one direction, and it's healthy to see retracements even inside trends. Okay, so keep in mind it should be an interesting week. I hope we don't get any funky action on the open, on the gaps, or funky action on Sunday open. That will mean that the review is irrelevant for the week. I don't think there's any massive event risk over the weekend. Those may be the famous last words. We'll have to wait and see. But again, as always, guys, thanks for following, thanks for listening, thanks for subscribing, and wishing everybody an awesome weekend. And may it be a very interesting end of the month and a very interesting week ahead. Bye-bye.